This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, March 30th, 2015. Euro dollar. So the euro has been consolidating in recent trade, though the market is in the throes of a correction off of the 12-year lows that we saw back on the 13th of March. At this point, we're going to need to see a break above the recent high that we saw at 110.52 or a break back below 107.67, the low from the 23rd of March, for clearer directional insight. A break back below 107.67 would suggest that a lower top is in place at 110.52 ahead of a fresh downside extension to fresh lows below that recent low that we saw at 104.62. But a break back above 110.52 would keep the correction intact and open the door for fresh upside towards the previous support at 111 and then potentially higher into the 112 area. But at this point, only a break back above the 1535, 1534 high from the 3rd of February would compromise the downtrend. Sterling dollar. So cable remains under pressure with the market just consolidating off recent multi-year lows at 146.35. At this point, a lower top is now sought out around the 151.65 area in favor of a fresh downside extension below 46.35 and towards 140 further down. Ultimately, though, only back above the 155.50 area would compromise the bearish outlook. Dollar yen. So dollar yen has come back under pressure in recent trade with the market trading down towards 118. But there is some very good support in the 118.23 area, and ultimately, given the highly constructive outlook for this market on a medium and longer term basis, a higher low is now sought out ahead of the next major upside extension beyond those 7-year highs recently established at 122.03 and towards the 125 to 130 area further up. Ultimately, only back below 115.55 would really compromise the highly constructive outlook. Euro Swiss. So Euro Swiss has been under pressure in recent trade with the market pulling back since breaking to a recovery high at 108.15 and the market trading all the way back down towards some key support in the 104.15 area. If the market can hold above 104.15 on a daily close basis, this would keep the recovery outlook intact in favor of a higher low ahead of the next upside extension beyond 108.15 and towards the 110-112 area. However, a close below 104.15 would compromise the recovery outlook and open the door for deeper setbacks, potentially back towards the parity level. Aussie dollar. So Aussie remains locked within a well-defined downtrend, with the market now locked in a consolidation ahead of the next downside extension below 75.60, which should expose psychological barriers at 70 further down. At this point, recent highs that we saw from last week at 79.40 about should cap gains, while ultimately only back above 80.25 would compromise the current outlook. Dollar CAD. So dollar CAD has been locked within a bullish consolidation over the past several weeks, with the market being well supported ahead of 23.50 and eventually seen back higher above recent highs at 28.35. Those are 5-year highs, and towards the 2009 peak at 30.65 further up. At this point, only a break and close below 23.50 would delay but not negate the highly constructive outlook. Kiwi dollar. So Kiwi has been locked within a bearish downtrend, with the market now in the process of consolidating in recent sessions ahead of what should be the next downside extension below recent lows at 71.76 and towards next key psychological barriers at 65 further down. At this point, any rally should be very well capped ahead of that recent high that we saw in the 76.97 area, though only back above 78.90 would really compromise the bearish outlook. SPX 500. So 2120, that high that we saw in February, the record high that we saw in February, and 2040, a recent low that we saw going back to the 11th of March, are the key levels to watch above and below. A break above 2120 would open the door for fresh upside in equities towards the 2200 level, while back below 2040 would suggest that a major top is in place in favor of an acceleration to the downside towards the 2000 barrier. Gold. So gold has had a nice recovery in recent weeks or recent days after stalling out just shy of the major support from the 2014 base at 1131. At this point, though, to encourage the prospect of basing and a further recovery outlook, the market will need to take out the 1223 high that we saw from the 2nd of March. Inability to do so will keep the immediate pressure on the downside with a potential lower top and retest of that 1131 2014 base.